Good afternoon. It is Saturday, April 7th. Actually, it's good evening. It's 8:30 at night, and I've been away a long time, and you could tell probably I don't have much of a voice. I was battling a head cold all week, lost my voice, ended up with laryngitis. Um, I can talk, but very faintly. But I've been wanting to get a video out for so long. So much is happening. Um, I hope you're still with me. Very difficult not being able to speak, especially if you're going to do YouTube videos. But anyway, the material has been building up and building up and building up. Um, and I think we're at a critical juncture. I really do. So I want to start with the Atlanta Fed and this GDP now, okay? Because they came out with another number, okay, on April 5th, 2.3% on April 5th. It had bounced slightly, but now it's on the way back down. So the GP now model estimate for real GDP growth, seasonally adjusted annual rate in the first quarter of 2018 is 2.3% on April 5th, down from 2.8% on April 2nd. And this is that GDP now. Okay, chart. And they were in La La Land. That was when they actually what we get first GDP of 5.4. And it's come down and down and down. Then it had that slight bounce over there. But now it's coming all the way back down again to 2.3. And if you look at this blue line, that's the blue chip consensus. So they're pretty much right in line now, still slightly above the blue chip consensus. And if you see that blue range, that's the range of the top 10 and bottom 10 forecast. So they're still on the high side of the top 10 of this range. Okay. They were in La La Land. Okay. And now, look at that. This is where GDP is going, people. Nothing has changed. Now, upcoming economic events, important events. The wholesale trade PPP, Producer Price Index, is April 10th. That's Tuesday. The retail sales and inventories, that's going to be huge. That's April 16th. Housing starts, industrial production and capacity utilization, April 17th. Advanced the durable goods, okay, April 26th, okay, and then personal income and outlays, April 30th. That's what we basically have left that's going to influence this GDP. Now, the gross domestic product, first quarter 2018 advanced estimate is going to be released April 27th. So we're practically here. You know, when they first made this 5.4% forecast, that was late January. Okay. And now the data has come in. We're only looking at 3 more weeks before the first advanced actual release comes out. And like I said, there's only a handful of economic reports left that could influence this. So we're pretty much right where we're going to be, 2.3%. We might go back below 2. Those are your indicators right there. Wholesale trade, PPI, retail sales, housing starts, durable goods. Personal income actually comes in after the first quarter release, April 7th. Now, they were in La La Land, okay? They have no credibility. Now, the head of the Atlanta Fed is this Raphael Bostic, and I've added him to the usual suspects list, okay? And when I heard that, that name Bostic, okay, you want a little trigger how you can remember his name? I came up with bombastic, okay? AKA Bombastic Bostic. That's what I call him now. Because what does bombastic mean? Here's the dictionary definition of bombastic. High sounding. Doesn't that sound like all these fed is? They're high sounding, but with little meaning. Right? Isn't that what the Fed is? And it's Kudlow and all these usual suspects. They're all high sounding academics trying to calculate and validate an economy from a junior year textbook. Okay? Academic eggheads that have they ever worked a real job? Have they ever had to make a payroll? High sounding, but with little meaning. Inflated. Inflated. Talk about 5.4% being inflated. La La Land. Raphael Bombastic Bostic. That's his new name. I gotta have a little humor. It's been a rough week. Federal. So are we now supposed to believe what I'm about to read? Based on his last call, past performance is no guarantee of future success. They're not even close. Federal Reserve Bank of Atlanta President Raphael Bombastic Bostic, sees a buoyant U.S. economy, lifting inflation to the central bank's 2% target sometime in the next quarter or two. How can we believe this guy? He's not even close. But he said he doesn't think this should prompt the central bank to choke off the expansion. I am actually very comfortable, and this is key, people, because we've been talking about this price level targeting. It's been below 2 for so long, so it doesn't matter if it goes above 2 for just as long, right? It'll weigh out this symmetric inflation that Powell likes to talk about. They're going to ramp it up if they have to. 24 might be coming. I am actually very comfortable going above the 2% by some amount. 2.2, 2.3. They're all just guessing, these people. They have no clue. They're running the ship right into the rocks. They're going to crash coming in. I don't think this is a crisis of overheating, he told Bloomberg Television's Michael McKee in an interview Thursday in Sarasota, Florida. This was just this past Thursday. I think it is also important that we take a stance so that everyone understands that the 2% level is an average, not a ceiling. There you go. They can't hit 2% now as it is. They keep saying they're going to get it. This is just, short term, they're going to get it. They don't get it, all right? Meanwhile, they're raising rates, okay, to give themselves a cushion. So now they're probably going to have to step on the gas to overshoot. It's all coming together, people. It's a perfect storm out there. Bostic, a voter this year on the policy-setting FOMC committee who supported its decision to increase borrowing costs last month, has said that his forecast calls for 3 interest rate hikes. So he's in for this 3. Is it 3? Is it 4? Does it matter? What does it matter, 3 or 4? I'll go right to the last sentence. I have some concerns. We have been below for so long that if we go to 2%, all these people that think the Fed can actually just go to 2% and just have a soft landing, what are they, crazy? If we go to 2% and do a hard stop and act aggressively to hold it at 2, that will send a signal that we really view 2% as a ceiling. 2% is not a ceiling, it's an average to them. That's this price level targeting. We have to watch that. Now, the next thing I want to get to, and there's a lot in the stack I might not be able to. This was on March 30th, this article. Because last week, the week before this last week, I was really watching these prices to see how gold was going to end the quarter. And I really want to get to that. This was an article on silver, March 30th. Okay. And what was very interesting to me, very telling about this article, this was not on some obscure financial website that you had to dig deep into the weeds. This was on a mainstream website. I think it was MSN, something like that. And it was right there on the home front page, right there. Sliding silver sends scary signal. Again, this wasn't buried in the weeds. I mean, it was right there. Wow, it's right there. Wow. Gold is priced 82 times higher than silver. The highest such discrepancy in 2 years, and seen as a negative economic indicator. Yes, because everybody views silver as an industrial metal. So if this is an industrial metal and everything is so wonderful, then why isn't there such a demand for silver? Industry needs it. No? Investors have soured on silver to start 2018 after prices rose over the last 2 years, a possible warning signal to the broader market. Silver futures have fallen 3.1% this year, trailing a 3.3% gain in gold, 82 to 1. There's something way out of whack here, people. And we all know this ratio. We've been following it. But now even this mainstream news outlet is putting it front page and center. That's after bullion rose 14% last year, double silver 7% advance. The divergence between the two means prices for gold are 82 times those of silver, which is 20%, 27% more than the 10-year average, and the highest level in 2 years, data analyzed by Wall Street Journal Market Data Group show. Gold has recently become much more expensive than silver, with the ratio between the two metals well above its 10-year average. Well above its 10. Something has to give. Something has to give, people. And I think silver's going to catch up eventually. I think gold is leading this time, but I think ultimately, okay, gold's little cousin, silver, when gold becomes too expensive, they'll turn to silver. That's what I believe is going to happen. Very long, interesting article. Okay, bearish trend. Net bets on higher silver prices have fallen steadily in recent weeks. Okay, the source is the Commodity Futures Trading Commission. Some analysts think silver's underperformance is a negative sign for precious metals. I don't think so. It's a negative sign for precious metals broadly because it is less actively traded commodity, making it vulnerable to bigger price swings. Going for the gold. Most of gold demand comes from jewelry, bars, and coins rather than industrial uses. Some analysts said worries that the global economy could slow down have also hurt silver. I'm not going to go into reading this whole article, but I wanted to mention it because of the fact that it was out there front and center. Okay? And I'm saying all that to say this. I think it's a contrarian indicator. I really do. People have given up on silver, and silver has been horrible. I'm the first to say it. I don't sugarcoat it. It's been terrible. It's been a disaster. Let's call it what it is. Okay? But I believe that gold is on the cusp of a major breakout. And I believe silver is going to catch up. Now, let's get in to what I wanted to get to, some of the technicals. Now, again, I was watching very closely the last few days of March because I wanted to see if gold could have held my key 1340 level, which it is. It's my 1340 level. And I got into a discussion with my friend, excuse me, and a debate, I'll say, because he's like, why are you saying 1340? Nobody says 1340. Show me on a chart why it's 1340. I'm looking at charts. I've been saying 1340 for how many years now? You don't necessarily see it on the chart, 1340. Every other analyst out there is going 1350. 1350, 1360. Nobody's calling 1340 but me. But time and time again, it stops at 1340 on the way up, or goes down to 1340, right? And then goes below. Mark, this is the daily chart. It might be hard to see, but the 23rd is very hard to see. But the 23rd, 25th, it had busted over that 1340. It hit 1360 right there, right? 1360. Sorry for all this. Right there. That horizontal line is 1340. And it came above it. With only a few trading days left in March. And then they whacked it late last week, if you remember. Wednesday, Thursday, Friday. They brought it back down below that 1340. But they couldn't take that low. It went down to about 1325. We've been putting in high lows these last 2 weeks in gold. 1300, as far as I'm concerned, is solid support. It's been above 1300 every day this year. And then it made another run. It made another run above 1340. Right this week, April 3rd, April 4th, right? They brought it back down again. Just when it looked like it was going to go down, it was over $15 the other day. They brought it down, but they can't keep it down. People are stepping in and buying the dip. And once again, we're on the cusp of 1340. This is a closer look at just last week's action. Last week's action, starting with the second over here. There you can see it coming above the line. They knocked it down. But why do I say 1340? Because every time it goes out on the people see 1350, 1360, when it goes down below 1340. It doesn't stop above 1340. That's what I'm waiting for. And then it goes up and has a time struggling getting above 1340. But I think we will. Now, this is what I want to talk about today. Because again, the week before last, I was really looking to see how gold was going to end the quarter. All right. And I went back and I have a spreadsheet going back to 1999, first quarter, January 1st to March 31st, second quarter, March 31st to June 30th, third quarter, ending September 30th, fourth quarter, December 31st, 1999, all the way up to the present, 2018. And what gold started the quarter at and what it ended. So in 1999, started at 287, right? Closed the first quarter 279, second quarter 261, third quarter 299, for end of the year, fourth quarter 29, so on and so forth. I have everything listed out there. Okay? Now, in yellow is the time that it closed above a quarter, above 1300. The first time it did it, 2010, third quarter, 1307, then 1405. Then we had that big run up in 2011. See those prices, 2011, 2012, even. And even into 2013, when this bear market really got underway. 3 quarters, or actually two, this was January 1st, 1693. It still was above 1300. 2014, only one time. 2015, never. 2016, twice. 2017, never. And now the first 2 quarters of 2018 is above 1300. It has not been above 1300 in the scheme of things It happens very quickly. It came. This is only span 2010, 11, 12, or 13, 4 years. And the heart of it was those 2 years, these 24 months, 2011, 2012. So I think we're right there. I think we're right there. I think it's going to continue. And this is percentage wise. Red, negative for the quarter. Green, positive for the quarter. Right? And right now, we've had, starting in 2016, with one exception, and that was only 0.2%, we've had positive quarters all the way up. So you look at these gains, 14%, 6%, 8%, 3%, okay, 0.8, 0.6. I mean, if we get a 1, 2, 3%, we'll be there. So I think it is looking very positive. And the stock market is ready to tank. I said, it was my last video. You get big rallies, bear markets, and we've seen that. On Monday, we had a down day. Tuesday, we had a turnaround day, right? Wednesday, it went down and then reversed all the way back up. And Thursday, but look what happened on Friday. We're going to see more of that. We're going to see big rallies in a bear market. Don't let that throw you. This market is going down. I want to close with this last chart of gold. This is COMEX gold, 1337. This is going all the way back, 1986. That's this 1340 line right there. We're ready. Well, look at it. That massive inverse head and shoulder pattern. We've had the left shoulder right here. The left shoulder, massive left shoulder. This massive inverse head that we're forming. And we're right there. That's why the battle is what it is. And speaking of battles, how many times did I mention the Battle of Shiloh? The Hornet's Nest. That's what we're in. The anniversary of Shiloh is yesterday and today. A people battle. 1862, April 6th, and April 7th. And this is the battle right here. This is it, people. We're in the Hornet's Nest. But I believe the perfect storm is here. I believe stocks are getting ready to roll over. These trade wars, Kudlow, oh, clear heads will prevail, he said on Tuesday. Then he comes out and says China is to blame. Why is China to blame? That makes no sense. People thought Kudlow was going to straighten out Trump. Trump straightened him out pretty quick, Mr. King Dollar. I buy gold. I buy a lot of the dollar and sell gold. You jerk. People, stay the course. Okay, I think this is going to be a big week. I really do. I would not be surprised to see a sell off on Monday. Follow through selling. So that's it, people. My voice is shot, but I hope this was some value to you. And if I can do more, I will, but I got to rest up this voice. But nevertheless, just watch these markets. Watch them. And, one other thing. One other thing I want to close with. There's some people out there that say gold is not manipulated. And they have their reasons, their agenda. Now, I said months ago, I don't bother to read Zero Hedge anymore because that's kind of bombastic too, some of these headlines. So I mentioned it many, many, many months ago. But I was referred to an article about a trader, okay? He's spoofing. I would check it out. Go to Zero Hedge, check out this article about all these trades, and we know about this because this has happened months ago. And this one trader who's bragging about it. Trader F, I think his name, they call him, the legend. The legend. So anybody who can stand there with a straight face and say gold, well, it's not manipulated, all we have to do is look at Elliot Wave, okay? And I'm speaking to that person, and he knows who he is, okay? And I could say some things, but I'm not. Or go, oh, it's only manipulated a little. Oh, it's only manipulated a little. There's only 1% sugar water in my water, so that's okay. What kind of nonsense is that? If it's manipulated, manipulated. Pure and simple. It either is or it isn't. Oh, it's only manipulated a little. It doesn't really affect the price. What are you, a jerk? You're a jerk, and you know who you are. Idiot. Don't let that person, okay, in any way sway you. Of course it's manipulated. Why shouldn't it be manipulated? This isn't like Snapchat and Chipotle. It don't matter, right? This is gold, right? This is anti-fiat. This is anti-government. This is freedom and liberty. Okay, you can't fight wars if you don't have the gold, so we'll just print money to finance these wars, not manipulated. What are you, a jerk? I had to get that off my chest, people. Go see the article. It's on Zero Hedge. Anyway, that's it. Have a good night. And Lord willing, my voice gets better. We pick this up next week, this week coming up. And Godspeed, people. Ciao.